Tape Reading and Market Tactics, Humphrey B. Neill. Almost a century ago, in the wreckage of the 1929 crash, a speculator sat down to teach traders something that still sounds radical today. Stop asking what a market is worth and start reading what it is actually doing. Humphrey Neill went on to become famous as the father of contrary thinking, but the ideas began here. And half in jest, he dedicated the book to his own losses, which he called the most honest teachers he ever had. Core thesis: the ticker tape for Neill was nothing mystical. It was a running ledger of where buyers and sellers actually met and agreed to exchange stock for money, and behind every print stood human beings acting on the same hopes, fears, and greed that moved the person reading it. The trader's task is not to forecast from facts, and never to guess who is behind an order. It is to judge the immediate balance of supply and demand from the interplay of price and volume, and to fall in beside the informed money that tends to move first. Read the result of the orders, he insists, not the rumor of who placed them. His deeper argument fills the final third of the book, and it is the reason the book survives. The decisive variable is not the method of reading. It is the person applying it. A trader can read a market perfectly and still lose, because with money at stake, hope, impatience, and pride override the judgment. In Neill's phrase, the greatest handicap the speculator faces is himself. The market discounts the future. Neill states plainly what most traders learn expensively. Prices reflect what informed money anticipates, not the facts already on the table. News is discounted before it is printed, which is why a market so often does the opposite of what the headline seems to demand. A company finally announces the bad news everyone feared, and the stock steadies and turns up, because the meaningful selling by those who understood the situation had been going on quietly for weeks. The public buys on good news and sells on bad. The informed operator, having acted long before, is usually doing the reverse. Corollary covers genuine shocks, the events nothing could discount in advance. When one strikes, Neill's counsel is to pause, ask what the majority will do at the next open, and take care not to do the obvious thing along with them. And if the situation is truly unreadable, the correct position is no position, watching until the tape reveals where the balance has settled. Strong hands, weak hands. The engine behind the tape in Neill's day was the pool operator, and his imaginary campaign is a small masterpiece of market anatomy. The pool accumulates a line of stock quietly while sentiment is sore. It arranges that no surprises will interrupt the plan. Then it advertises, and the most persuasive advertisement ever devised is a rising price. As the public crowds into the advance, the pool feeds its accumulated stock into their eager buying, finishing the distribution on the very morning the long-awaited good news finally hits the papers. The names have changed and the mechanism has not. Read institutions for pools and the plot is identical. What matters to the reader is the technical position, whether a market rests in the strong hands that accumulated it cheaply or has passed into the weak hands of a crowd that bought it high. When stock migrates from strong hands to weak ones near a top, the position deteriorates even though nothing in the underlying story has changed, and the tape shows it in stalls and saw-toothed highs met by heavier selling. News and tips are the tools of distribution. Because news so often serves the distribution, Neill treats headlines and tips as the most dangerous inputs a trader can act on. During a markup, the papers fill with bullish stories about the very stock being unloaded, so the amateur who buys the tip is following a schedule someone else wrote for him. The remedy is to confirm everything against the tape itself, letting the market's own action decide whether the story means anything. He notes that many of the great operators barely read the financial pages at all, precisely to keep their judgment clean. Osiris Capital Trading Desk holds the same discipline on your behalf. Headlines in the calendar are weighed as context, never as a reason to trade. Every call it makes has to justify itself on the structure actually printing in front of you, and when the only argument for a trade is a story, the call is not made. Volume is the dependable guide. The tape tells the story, volume makes it legible, and Neill returns to it constantly as the trader's dependable guide. Rising volume confirms in advance. Heavy volume that produces no further progress warns that supply has arrived to meet the buying. Climactic bursts of activity at the extremes mark the turns, and some moves simply die of starvation, exhausting themselves on light volume for lack of fuel. His most distinctive habit is to reckon transactions in money rather than points, feeling the dollar weight of what is changing hands, because it sharpens the sense of how much real capital is committing and on which side. Osiris Desk thinks in the same currency. Risk is counted in money rather than ticks. Positions are sized, so the money at risk stays constant whatever the market's mood, and even a slip of discipline gets logged with its cost attached, because points flatter and money tells the truth. Patience in the intermediate trend. Neill is blunt about where the outsider's edge lies. Not in the daily wiggles where the professionals hold every advantage, and there is no time to think, but in the intermediate trends that run for weeks and months. The in-and-out scalper of his era rarely lasted a season. The trader who waited for a clearly indicated trend and played it with the general market rather than against it had room to be right. From this follows his plea for patience, the great market virtue. A handful of well-chosen trades in a year, taken when the trend is definite and abandoned quickly when it turns, will return more than hundreds of restless attempts at the minor moves. And he adds the maxim that reappears through the whole book. It is the timing of the commitment, not the price paid, that produces the profit. And when the trend turns, you sell quickly and let the other fellow have the top. The crowd is wrong at the turns. Here is the seed of the contrary thinking that made Neill's name. At the important turning points, the majority is always wrong. The public buys near the top on good news and sells near the bottom on despair. And when everyone has finally agreed on one side of the market, that unanimity is itself the warning. He used exactly this reasoning in late 1930 to spot a temporary bottom at the moment the public had concluded that selling short was the only way left to make money. The nuance matters as much as the idea. Neill's contrarian does not quarrel with every move. The ideal is to precede the public during quiet accumulation, travel with the majority through the profitable middle of the advance, and part company only at the signs of maximum participation. The fast, greedy buying near the top but no longer moves the price. Stand apart at the extremes. Keep company in the middle. Being contrary for sport is just another way of fighting the tape. The impersonal viewpoint. The book's final movement turns entirely inward, and it contains the oldest secret on any trading desk. Take losses quickly and cheerfully the moment you know you are wrong, and let profits run when you are right. What stops people is never the arithmetic. It is that the loss has been made personal. Neill's cures the merchant's mind. A shopkeeper marks down a slow-moving coat and clears it without a second thought, feeling nothing, because inventory is not identity. The trader who can regard positions as merchandise rather than objects of affection is free. The supporting rules follow from the posture. There is no position worth defending once it shows a loss. Never answer trouble by sending good money after bad, and never average a loser to soothe pride, which he calls financial suicide. His test for every holding is beautifully deflating. If you would not buy it fresh today from the sidelines, you have no business holding it on nerve. Market poise. Neill gives the professional's emotional state a name, market poise, the calm of a trader who entered deliberately on reasoned judgment and can therefore hold the position at ease, watchful for error but not gnawed by fear. The gambler who wandered in on a tip can never have it, because he staked money on nothing. Poise grows out of judgment, and out of the settled willingness to stand aside whenever the contest between buyers and sellers is unclear. This register is exactly the one a Sarah's desk was built to keep when yours is being tested. It watches the session and speaks within moments of the bar that matters, briefly and calmly, one read at a time. And when you are under pressure, its guidance gets simpler and steadier rather than louder, because poise, borrowed often enough, becomes your own. Bottom line. The paper tape is gone and the pool operators have new names, but nothing essential in this book has aged. Read the balance of supply and demand from price and volume. Respect that price discounts the future rather than reporting the present. Treat news and tips as the instruments of distribution. Stand apart from the crowd at the extremes. And above all, master the person applying the method, because the trader who takes losses impersonally and quickly is the one who is still there when the great trends arrive. Written nearly a century ago, it reads like a memo from tomorrow's best desk. Trading careers are rarely built on secrets. They are built on plain rules like these, kept long after they stop feeling new. Osiris' desk is one of those plain rules made durable, an advanced platform for trader development and disciplined trade management, and the flagship of Osiris Capital. It stays durable by actually opening this very book at the screen, session after session, rather than trusting memory to hold on to it. It reads what was actually done rather than the story about it, counts risk in money rather than points, and keeps its poise when yours runs short, until trading the tape and not the news is simply how you trade.